Okay, we'll go ahead and get started on the next webinar, Global Asset Transfers. I want to thank you for joining us. This morning what we will go over in this presentation is the transfer process today using Oracle functionality, and we'll walk through the format, the screenshots that are needed in order to process the transfer, and then we'll talk about an automated solution that will eliminate some of the risks involved in today's process. So if we look at today's transfer process, and we have a flow chart that we'll look at, one of the first things that we need to do is to determine what asset or assets will be transferred, either by asset number, serial number, tag number, whatever identifiers you guys have, we would need to use in order to determine what assets are required to be transferred in this process. We need to gather the asset information for each of the assets and document that. So we need to identify what the asset description is, what the financial values are, what asset categories. So any descriptive financial distribution information we need to capture. The individuals that are losing the assets will need to go ahead into Oracle and process a manual asset retirement. There needs to be a determination on when the receiving side receives this asset, how to put this on their books financially,
has joined the conference,
and how to put this on their books as far as the life treatment of the asset. So if I put this on my book with net book value only, how do I handle the life? So those determinations need to be made up front. Something else that needs to be determined is whether or not I need a translation rate if I'm dealing with two depreciation books in two different currencies. If I am, I need to go ahead and grab that exchange rate. The only place that Oracle houses the translation rate is in Oracle General Ledger. So the Oracle asset person, if they have access, would need to go into the General Ledger and extract that information. Otherwise, if they do not have access to that detail, they would need to go ahead and ask someone in General Ledger to write down what that translation value is. Once that translation value is received, someone would need to manually go in and revalue those assets that are being transferred. So recalculate the cost, year-to-date, and accumulated depreciation for each of the assets. Once that has been done, the people receiving the asset will need to manually go in and key in this information into their addition screen. One of three ways they can add the asset is through quick additions, the detail additions, or they could upload it through the spreadsheet using Web API. Once that has been done during the month-end process, the retirement and the addition will happen within the same month. Each side would have to create journal entries to clear out the gain-loss account on the retirement side and to clear out the asset clearing account on the addition side and book that to the intercompany accounts. So during consolidation, those two accounts will be eliminated. How this would take place within the Oracle application. You would need to go ahead into your asset workbench to identify the asset that is being transferred. So we're going to show you just one asset being transferred. I'm going to enter in the asset number and select Define. Once I have this information, I'm going to need to document information because the receiving side will need to put in the same description, possibly any descriptive information would need to be the same. So I would need to pass that information on so that they could upload it. They need to know what asset category it's in so they could put it in the same asset category if they have that, otherwise a similar asset category. I'm going to gather the information for the source line information. So again, they could go ahead during data entry and put in what invoice number this asset belongs to for reference purposes. What is the supplier? Financially, I need to gather the information so that when I get to the point in time where if I need to calculate new values for the assets, I have the original cost, the original year-to-date, and accumulated depreciation amounts, so that when I get that translation rate, I can calculate the new values. Also, I need to know what the method and life are, so when the decision needs to be made for how to financially and bring this asset over to the new books and what to do with the life, I have all the relevant information financially from the existing books so I can make those decisions. I'll also gather the distribution information. Once I have that information gathered, me being the losing entity, I'm losing this asset, I'm going to go ahead and process the asset retirement. Now, some things that I need to determine when I do this asset retirement, I need to know the actual transfer date of the asset. So I may need to backdate this a couple months if the transfer actually took place 2 months ago. I need to determine and know if it's a full asset transfer, so I would retire the full asset, or if it's a partial asset transfer, where upon the retirement, I would have to retire a partial of the asset based either off of the number of units or off of the cost of the asset. I would also need to know if there's any proceeds of sale or cost of removal on that transfer. So if the asset was actually sold and I received something, I need to know that in order to plug that into the retirement side, or if there's any cost associated with removing that asset out of my facility to send it over to another entity. Once I populate this information in my retirement form, I'm going to hit done and process that, save that retirement. The next step is to run the calculate gains and loss to actually process that saved retirement. I'm going to identify the book. I'm just going to go ahead and process that retirement. On the receiving side, one thing that I need to do, I need to determine my financial treatment of the asset. How am I financially going to bring this asset onto my books? A couple options, the way that I see it, is you could do a carryover transfer, which means I am going to put on my books the same cost, the same year-to-date, and the same accumulated depreciation, translate into my currency. I could do a cost only. So if this is a CIP asset that's being moved that hasn't been depreciated, I could go ahead and just bring over the cost. I could do a transfer of the net book value. So I leave what depreciation was done on the other side. I do not record that on my books. I just bring over as my cost what they had as their net book value. Again, that net book value that they had will be translated to my currency. Or I could do a transfer of the amortized net book value, which is similar to the carryover, the first process. I'm going to put in cost, year-to-date, and accumulated depreciation values that have been translated into my currency. But I'm going to check the amortized flag and put in a amortization date. What this will do, what this eliminates, is if I put in a different life or a different depreciation method, when I run depreciation for my books, it's going to start calculating depreciation based off of the net book value instead of the original cost. So I will not get a huge catch-up depreciation value the first time I run depreciation for this asset. I need to determine what to do about the life of the asset, how to reflect that on the receiving side. And a couple options that I have there is that I could transfer along with the asset the original life of the asset. So if I'm transferring the original cost, year-to-date, accumulated depreciation, I may want to keep the original life. So again, I will not see any big fluctuation in depreciation when it comes to my books. Another option is to ignore the life that the asset had originally and allow the system to just default the life that's associated with my asset category when I add that asset. So if it was depreciating over 3 years and now it's depreciating over 5 years on my books, I just keep it as 5. Again, note on that option, I may receive, if I choose to expense that change, that transfer, that I may receive a catch-up depreciation, either positive or negative value in that first period. The third life option that I have is that I could bring over the remaining life of the asset. So financially, if I'm transferring the asset at a net book value, I may prefer to transfer along with that the remaining life of the asset, so it completes out the natural depreciation for that asset. Once I determine how I'm going to financially put that asset on my books, I need to see if there's any. I'm going to go ahead and just determine that we need a currency translation rate. So in the general ledger system, I need to go ahead and grab what the translation rate is. So I'm going to go into my general ledger system, go into my rates, daily tables. I'm going to identify the to and from currency. This transfer is happening from Australia to the U.S. dollar, so I need to grab that exchange rate. Note, most rates are long and tedious rates to key in over and over. Note the USD to Australian dollar rate at this transaction date. One of the risks involved in today's process is the manualness of having to calculate the rates. Many times people will fat finger a rate, miss a number, or miskey in a number that will result into an incorrect value of the asset. Once I have that rate, I will go ahead and translate the values of the asset, the original asset values to the new asset values. And then I'm going to add the asset. Again, the three methods of adding an asset in Oracle is either quick addition, detail addition, or through ADI. Depending on what information you are going to key in, determines which process you want to use. If I am doing a carryover basis, which is the cost year-to-date and accumulated depreciation, I'm most likely either going to do ADI or I'm going to do the detail form. That allows me to populate those values. If I do that in quick additions, I cannot populate a year-to-date or accumulated value in quick additions. So quick additions will be used if I'm doing a net book value transfer or if I'm doing cost only. The other two types of financial treatments would be done through either the addition form, the detail form, or the ADI form. When adding the asset, one of the key points that I need to determine is how do I want to handle the asset numbering. A couple options that I could do is I could just have Oracle use this auto numbering schema and just assign an asset number to this new asset that I'm adding into my system. Or if I wanted to have some type of link back to identify that this was a transferred asset, I could go ahead and manually key in a value that would note that the origin of this transaction. So I can key in the original asset number followed by an A, a B, a C, whatever I want, trying to identify that this record came from another record, and I can identify what the original record was. Asset additions, again, the data that I'm going to be populating on my descriptive side is the asset number. I need to determine what schema I want to use. The asset tag number, description is going to be required that I need to key in, asset types required, categories required, so I need to identify what category this asset is in. Go into the asset key, unit, serial number, model, manufacturer. So if I have that information, that's the information that I need to document. So upon data entry into the new book, I could populate these fields. So this kind of walks through the quick additions form and the new additions form and what is required. So on the quick additions form, the first portion of the form is your descriptive information. On the detail additions form, it's the first form that you pull up is all of your detail information, your descriptive information. Entering purchase order and information and invoice information can only be done through the detail additions form. Quick additions, you do not have the capability of adding this information in at the time of the original data entry. When you look at your financial information and entering your financial information, again, you're going to entering your translated asset cost, year-to-date and accum, if applicable, depending on how financially you are going to treat it. You need to enter in the proper date, place, and service. So again, the date, place, and service is going to depend on how you are going to treat the financial side of the asset. If I am doing a carryover, which is, the cost year-to-date accumulated depreciation, or if I am doing the amortized net book value, my date, place, and service must be equal to the original date, place, and service of that asset. If I am bringing this asset over financially at net book value, my date, place, and service should be equal to the transaction date of that transfer. If it is cost only, again, depending on what stage that asset is in, if it's a CIP asset, it really doesn't matter what my date, place, and service is, just because it's not a live asset. If it is a live asset and I chose to bring over cost only, I would need to bring over, if I wanted my system, the new system, to recalculate depreciation, would be the original life. I'm sorry, the original date, place, and service on that. I need to enter in my depreciation method, my life, and again, my life option depends on financially how I'm going to bring that asset over, and my prorate convention. On the quick additions form, the middle section is where I will calculate most of that financial information. On the detail additions form, I have a separate form that I would calculate all of that information. Note on here, I could put in the year-to-date accumulated depreciation. I do not have those fields on the quick addition side. The assignment, I need to assign this asset optionally to an employee, but I definitely need to put it to a depreciation expense account combination and a physical location. The bottom portion of the quick additions form will house that information, and then there's a separate screen for the detail additions that will house that information. Once I process my retirement and once I process my additions, I need to create intercompany accounts. And the reason being is when I do the retirement, the journal entry that is created on my retirement is going to debit the accumulated depreciation, credit the asset cost, and book a gain and loss value. What I need to do is remove that gain and loss amount. On an asset that I still have control of, that I still own, just because I'm transferring it from one business unit to another does not mean that I should take gain and loss. That gain and loss should be reserved until that asset is disposed of and out of use through the company. So I would manually need to create a journal entry offsetting the gain and loss and booking to the intercompany receivables account. On the receiving side, when I add an asset, the journal entry that Oracle is going to create is going to debit the asset cost and credit your asset clearing account. The manual journal entry that I need to book in order to clear out the asset clearing account is as follows. I need to debit that asset clearing account, and I'm going to credit either one line or two lines, depending on financially how I brought that asset over. If I brought that asset over and I calculated the accumulated depreciation, I need to put in that accumulated depreciation on the general ledger side. So I need to credit that amount in the accumulated depreciation. The difference will then go into my intercompany payables. Upon consolidation and elimination, my intercompany receivables and payables should match and should wash each other's out. When we want to talk about this transfer options, we are utilizing Oracle's standard process for retirement, for additions, and for creating journal entries. The only bit that is not a standard feature of Oracle is your intercompany journals. One of the things that has been discussed in that process is to eliminate the need to offset your gain and loss accounts and to get out of having to do that. It's been noted out there in Metalink that many companies do not like to have a retirement go to gain and loss in a transfer scenario. One of the solutions that have been brought forth by Oracle out on Metalink is to do the following, is to eliminate the gain and loss issue, is to go into the asset workbench, query up the asset that is being transferred, and adjust the cost to zero. Save that, and then what you end up doing is retiring a $0 asset, which will result into no gain and loss. The issue with this, and this brings up a bigger issue, is when you change an asset cost from whatever value it is to zero, whatever has been calculated as accumulated depreciation on that asset would be reversed in that period that cost was changed. So what you're telling Oracle is that this asset value should never have been a value. It should have always have been zero. So any depreciation taken on that asset is going to be reversed. So you're going to get hit with negative depreciation in the month that this occurs, which to me is a bigger issue. Now you have to mess around with your depreciation accounts to try to figure out how much depreciation should have stayed, because you're going to impact not just a gain loss account, which you would have if you just did the retirement, but by zeroing it out, you're impacting your accumulated depreciation and your depreciation account. So now you're going to have more manual journal entries to correct those issues. So all you're doing is you're shifting that responsibility from your gain and loss issue to a totally complex depreciation issue. And you have to book journal entries to get your depreciation in line. Some of the tax book considerations, if you are utilizing tax books and you are transferring, is, again, the main thing is how each of those legal entities can conduct business. So sometimes I've been involved in organizations where some business units had to treat each other as customers, if you will, where they had to sell and buy assets between each other. Other entities within that same organizations were considered a flow-through. So if they had a transfer, that asset had to look as if it was always on the receiving side from day one. So they had to carry over the cost year to date accumulated. In the first scenario, they had a purchase of that net book value. So you have to know legally how can each business unit conduct business with each other. And then if you are having tax books involved in your system, you need to know, same as we want in the financial side, the tax value, how to carry over that tax value. Do you have a new financial value? So whatever my financial cost of the asset now becomes my tax cost? Or for tax purposes, do I have to bring over the original tax values off of the losing side tax books? Or do I have to bring over the original financial values? So those are my options that I have to determine for tax purposes. What are the value of my asset? The same thing with the life. How do I treat the life? My two options for life would be either defaulting it to my current book's life or bringing over the original life. And I have to know or the tax-wise, how best to treat that asset. So the current process is a heavily manual process that has a lot of risks involved in it. You can miscalculate your translation rate. You have to manually create journal entries depending on how you retire the asset, if you have a gain loss issue, or you're going to have your depreciation issues that you have to fix. If we move forward into our automated transfer solution, we'll look at the same flow chart that we looked at the very beginning. And what we're going to do, we're going to lay over what bit of this process gets eliminated during the automated process. So you still need to determine what assets need to be transferred. No longer will have to document or gather information on assets. You will no longer have to perform an asset retirement. You still need to determine and select from a list of values how to treat the asset financially and with a life. You won't even have to think about currencies. You won't have to worry about going into the general ledger and grabbing the translation rate. The manual bit of recalculating the new values will be eliminated, and the addition into the new depreciation book will be eliminated. The one thing that still would need to happen in the automated solution is a manual journal entry of intercompany, and we're hoping to eliminate that process soon. The one thing that is holding that up from being automated is the lack of Oracle booking accumulated depreciation on new assets. Once that has been resolved by Oracle, this bit could be automated. If we look at just purely the solution, the automated solution, you're going to determine the assets to be transferred. You need to query up that asset or assets in a transfer form. You're going to determine if that asset is a full or partial transfer. You're going to determine the financial treatment of that asset and the life treatment. You're going to submit a transfer request. It's going to go through approval process. So unlike the current process, this automated process has workflow built into it that is SOX compliant, that will go through an approval process. Until this process has been approved, nothing gets done within the system. And at the end of this process, you'll book your intercompany journal entries to offset your clearing account and to offset your gain loss account. Some of the benefits of this solution is that within one form, you could transfer a single or multiple assets between your corporate books, regardless of currency, regardless of chart of account structure and values, and regardless of the asset category values. You have options in a drop-down list to choose for your financial options, which are costs, year-to-date, accumulated depreciation and costs, which we call a carryover, net book value or amortized net book value. You have a drop-down list for your life as well, which is the original life or carryover life, the default life, or the remaining life. Other benefits include that the translation of the values is automatic. You will see that in real time on the form what the new value of the asset is. You could transfer full or partial transfer of an asset, and you maintain an audit trail between the asset being transferred and the asset created. And also there's a built-in approval process. The steps within Oracle in order to process transfers through the automated process is the automated solution will add a new navigation path on there called Corporate Book Transfer. Once you click onto that, it gives you a summary list of all the transfers that have occurred. what was done with the summary list is that what this means is you could start a transfer. Let's say at the end of the day, you run out of time, you need to leave the office. You could stop the transfer, log out of Oracle, and you come back in the next morning, pick up where you left off. It's not a process that once you start, you have to complete. You could start keying in some information, pause, get out of the forms, come back in and pick up where you left off. The first step is to select the assets to be transferred. You have your selection criteria up at the top. So by any combination of these fields, I can populate information and select the apply criteria. This will go out and on the bottom list all the assets that meet that criteria for the transfer. Once I have the asset that is going to be transferred, I am going to populate where it's being transferred to. Any information that I want to put up at the top portion of the screen, I'm going to then hit the apply, and it's going to apply these values to all the assets listed down here. So if everything is going to be from a computer PC, I could put that value here, hit apply, and all these assets will then be going into the new book as computer PCs. I'm going to identify, if I so choose at this point, a new asset category. If it stays in the same asset category that it's currently in, I do not identify anything here. It will automatically go into the category that it's currently in. I have the option here to change that category. So if the receiving books does not have the same asset category as it's currently in, I could choose during this process to put it in a similar category. I'll identify the transfer date. Again, the accounting information I can put in here. If I'm using the same chart of accounts and the same accounting values, if nothing's changing on that from the old to the new book, I leave this blank and it's just going to be copied over. So we'll see that with the location. I'm going to leave the location blank, and we'll see when we go through each of the tabs what happens with that location. So if I look at my status tab, it's going to tell me what the status of that asset is. The general tab is going to give me what the new asset number is going to be. So right now, it's going to be the original asset number followed by an underscore T1. That means that it was transferred the first time. And it's going to carry over the description of the asset. At this point, I have the capability of overriding this description if I so choose. The asset category is going to identify what it is currently in the current set of books and what it is going to be known as in the transfer to set of books. Again, it's the same equipment movable category that it's currently in. It's also linked to the Australian corporate book. I would just leave the category up here blank, and this would just be set to the same value. In my units, my transfer to, my options here for the method of the transfer is either going to be a cost, full, or unit. If I select full, none of the values here are updatable. If I select cost, I'm allowed to update the current cost of the asset to set this to whatever cost value is going to be transferred. As soon as I select this cost value, this currency will be updated based off of the exchange rate and the date, place of service, or the transaction date, to what it is going to be equal to in Australian dollars. If I change this method to units, the unit is what becomes available for me to update. Just like a retirement and the requirements of the retirement, you can only transfer a whole unit. I can't transfer 0.25 of a unit. In that case, I would go to the cost and transfer in a value. So real time, you're going to see what the new value of this asset is in the new currency. This asset originally was assigned to an employee. So again, since I left this blank, This will be signed to the same employee. I could delete this information here and not have it linked to any employee at this time. I'll enter in my transfer to location. My accounting information will be entered in. It was entered in up above and applied. And then my cost, I have a couple of things that I would populate here. If I have a cost of removal or proceeds, I'll populate that information. I'm going to populate my financial option, which this is the list of values there. So I could do amortized net book value, carryover, cost, or the net book value. I'm going to identify my life, which I could do carryover life, default life, remaining life. Once I have that done, I'm going to go ahead and submit that. It's going to go through an approval process. I'm going to see here on the summary that this is in the approval process. It's working. This is the email notification that the approval will receive. So for each depreciation book, there'll be the owner of that book will need to be identified, and that person is the one that will be receiving the email notification. We'll give them all the original information about the asset and the new information about the asset. They have a choice to approve this transfer, reject it, or request additional information. Until they select approve, nothing is done within the system. So this just talks about the approval process where they can approve it, reject it, or ask for additional information, and the information that they'll see on the email notification. So once they approve it and the processes are done, this is what you're going to end up seeing on your asset workbench. You're going to have, if I just queried off under that main asset number, with a wild card, I'll get two records, the original record and the T1 record. When I look at the original record retirement, this is what the process, the automated process did. It went through and retired this asset. If I look at the T1, the transferred asset, and look at the financial information, this was a carryover. So it brought over the original cost. It brought over the translated year-to-date and accumulated depreciation. It was the original straight line and original life method that it brought over as well. And you can see as well the date place of service is the original date place of service. So what this process does is it eliminates the need to manually keep track of all the details of an asset during the transfer process. It eliminates the manual retirement of an asset. It eliminates the manual addition of the asset and calculation of all new values. What this process ends up being is more of a decision-making process where you determine what assets to transfer. You determine if it's a full or partially transferred asset. You determine the life treatment and the financial treatment, and then you submit it for approval process. Is there any questions on the global transfer process? Nope. Okay. Well, if you have any questions, feel free to email us. Again, this presentation is available on our website. Again, if there's no other questions, thank you very much for joining us this morning. Have a great day.